Now we're on to walking through a CFD and a share trade side by side, just to show you the real benefits of CFDs over traditional equity products, which is where most people progress from. We're going to have both the share trader and the CFD trader trading in exactly the same instrument, which would be Rio. Same prices for entry, exit, etc. Just showing the difference in commissions and so forth. And return on investment is the most important part, just to show you the power of leverage and obviously the power of CFDs. So opening purchase price for both CFD and share trader is going to be 47 quid. Both of them buying 100. Commission paid, we're going to go 0.1% for both of them. I'm not going to get involved in taxes here. You really need to seek your own advice for that. Although, generally speaking, CFDs don't incur any sort of VAT, whereas shares potentially do for you. So I'm just going to stick with industry minimum trade values. So in the CFD account case, we've got 10 quid as a contract minimum, and we've got the shares at £15 minimum. Okay, so again, industry standard, it might vary for you. But again, generally speaking, share trading is going to be a bit more expensive when it comes to commissions, especially when you get more active. Now, total exposure, both traders is 4,700 quid because they've both got 100 Rio at £47 each. Now, here's the big difference we firstly notice, other than the lower transaction fees for the CFD trader, is that there's only 5% margin required for the CFD trader. So to take that position, only £235 is required, whereas the share trader has to come up with not only the full 4,700 for the shares, but then on top of that, obviously the £15 for the commission. So the initial outlay is far greater, as you can see, for the share trader as it is for the CFD trader. Now, let's say overnight Rio went up to 48 quid a piece. We've still got our 100 that we're going to offload. Therefore, the value's gone up to 4,800 for both the CFD and the share trader, because again, they've got exactly the same position, exactly the same market. Commissions, again, because they haven't met the threshold, £10 for the CFD trader, 15 for the share trader. I'm again going to leave out tax for now. We're going to take a financing rate of 3% based on the fact that LIBOR would be at a rounded up 1% and the margin of additional margin of 2% the provider charges. So really only 39p to hold that 4,700 pound position overnight, which is nothing. I know the share trader obviously doesn't attract any financing costs because they've outlaid the full value. But again, the total outlay, look at the difference. So £255, or just over £255 for the CFD trader, 4,730 for the share trader. So therefore, that 100 quid profit, not only does the CFD trader come out with a little bit better net profit, about £10 better, because of the cheaper commissions. But if you look at the return on investment, 31% for the CFD trader, only 1.48 for the share trader. Now, if you want to look at this from another angle, let's say that both the share trader and the CFD trader had £5,000 in their account when they started. Now, once this position was taken, the share trader would no longer have any money left to trade with. They'd have, 280 odd pounds, and that would be about it. Whereas a CFD trader would still have in excess of 4,600, 700 pounds that they can continue to then open more positions, diversify, take other trades, hedge positions, or simply, in most cases, instead of trading the same size positions, take a much bigger position to get a much bigger profit. So, two benefits of CFDs shining through there.